Good evening, everybody. All right, so we're going to just do a quick summarized version of the stream for those who were not able to catch it. So I'm just going to go over kind of the highlights. So here for the portfolio, this is hosted on M1, this is hosted on Robinhood, and this is the high yield dividend income portfolio. So as we can see, I'm still holding CHPY, which is a semiconductor ETF from YieldMax. I'm holding PLTW for Palantir, NVW for NVIDIA, which are both weekly pay ETFs from Roundhill. And then we have XPAY, XDTE, which are S&P 500 cover call ETFs, again from Roundhill. Now, these all pay weekly with the exception of XPAY. So I am toying with the idea of getting out of XPAY and then moving that money into XDTE. I really do like the whole weekly pay, and on a month basis, it looks like XDTE has actually been paying more than XPAY. Of course, XPAY is a target 20 fund, so meaning that they will pay out 20% distribution yields consistently month over month. Now, that could be a good thing. That is a great thing, especially when you talk about stability. Most of it is a return of capital, so just keep that in mind. Now, for XDTE, their dividend yield for this ETF is fluctuating between about 26 or 24 and 26%. So I do like that. I do like how XDTE has just been performing well. They did have one upset over the month of April. It was pretty bad, but again, I do like XDTE, and I may just sell out of XPAY and then move that money into XDTE. I mean, they're both tracking the S&P 500, so kind of in my thought process, why have two when I could just have one and then just increase the position, increase the dividend income for XDTE. So the biggest news has been around Palantir. I hold a sizable position in PLTW. I hold about $25-ish thousand in PLTW. And then Palantir had earnings and it completely sold off, right? Had a huge sell-off, had a huge run-up over the last month. We were up well over 60%, all right, from April 8th all the way to Monday, May 5th. So huge run-up. And then there was this huge drop-off over this last day. And now we are down about $10 or $11 from its all-time high. Again, some people think that this is just, people taking some chips off the table, taking some profits, which I'm inclined to believe. I don't think this is bad or, there's anything fundamentally wrong with Palantir. As a matter of fact, I'm very bullish on Palantir, and I plan to hold PLTW well into the future. PLTW, they do pay you weekly, all right? So this is a weekly pay ETF. So every Tuesday, you get dividend income, right? But their dividend distribution, it's not a cover call ETF. This is based on some type of proprietary formula that they use to come to their dividend distribution. So I'm expecting some type of income coming in on Tuesday. And if I remember correctly, it's going to be about 60 cents a share from their distribution update. So I'll be expecting about, we could do some quick math here. Let's see. Where is my calculator? So 660 shares times 60 cents. So I can be expecting about $396 in dividend income for the week. So not too bad, not too shabby. And again, I'm going to hold this well into the future. I don't see anything wrong with Palantir. So Palantir was in the news. They had their earnings today, and earnings were pretty good. However, the shares continue to fall again. I think it is a combination of people taking their chips off the table, taking their winnings, and probably redeploying them. There's nothing fundamentally wrong with Palantir, but it is richly valued. There is a bear case and a bull case for it. The bear case being that it's a technology stock and that it's overvalued, and that there's nothing supporting this valuation, which could be true. And then there's the bull case where it's more story driven. It is winning in the revenue game. It is beating its revenue targets, and it's continuing to get new contracts. So Palantir shares fall as company reports inline earnings list full year guidance. So they did really, really well that they lifted their full year guidance. All right. So now they're actually planning to make more money this year than when they originally started at the beginning of the year. You guys can check that in the investor presentation for Palantir. So by them raising guidance, this is them basically telling investors that, hey, we think we're actually going to make more money. We think we're going to make or gain more contracts which, of course, that's going to be lucrative for investors as well. And that should, in my opinion, cause the stock price to continue to climb. Okay, yes, this pullback was kind of crappy. Yes, the pullback was, more or less, I don't know if it was unexpected, but, it is just something that I wasn't hoping for. But again, I think, long term over this next year, we'll see Palantir hit new highs. So I'm still very bullish on it. In Palantir's realm, they have been seeing an increase in their commercial sector adoption. So more and more commercial companies are starting to adopt their software. So this is a really good sign that they're not just reliant on defense contracts. They just did win a huge multi-million dollar contract with NATO. I think it's somewhere in the $100 million range. I could be wrong there. But, that is a really, really big contract. And to win that contract is going to open doors not only for other, militaries around the world to adopt, or other huge government organizations, either in Korea or Japan or maybe even New Zealand or somewhere else. But I think that's going to open the doors for them. And then commercially, it's being adopted, meaning that private companies are using Palantir, not just in the United States, but also in overseas markets. So again, I think this is a huge tailwind for Palantir. So moving on to the M1 Finance portfolio, this portfolio holds most of my more stable income or more stable assets, things like REITs. There is a technology ETF in here, which is highly diversified. And then you have BDCs as well as a crypto ETF. The REITs have been performing very well over this last month. When Liberation Day happened, we had a huge sell-off. Of course, we reached, a new low, and then we've just been steadily climbing back up. So REITs have been performing very well. I'm in the green for a lot of the positions. They're starting to come green anyways. I'm still down pretty hard with, Alexandria Real Estate, and I got to show all because it's only showing the month. But it is down about 48%, which is, kind of crappy, and it's due to oversupply of lab space. But I really think that, as time goes on, that Alexandria Real Estate will continue to grow. The stock price will continue to grow. We'll get past these headwinds, and right now it is paying a really decent dividend yield of about 7%, if I am not mistaken. Let's just quickly check because I don't want to steer anybody wrong. The dividend yield is going to be... checking. Yep, 7% for the dividend yield. So pretty good overall. So going back to the REITs and the REIT sector, nothing else is really on my mind. I have no new buys, and no changes that I want to make to this slice. I want to keep everything as is. I'm very, very bullish on apartments. There's a huge supply issue going on. New apartments are not coming online. All the old apartments that were built in 2020 to 2022, they're finished, they're completed, they're getting absorbed into the local markets. So, right now there's still a housing shortage. So I think apartment REITs have a lot of tailwinds behind them. So this is going to further put a lot of, this is going to put apartment REITs in a favorable position in the next couple of years, excuse me. So no other changes. Still very bullish on industrial. This sector has been pounded really hard because of the tariff stuff that's going on. And, if no one's buying anything, then these warehouses are going to sit empty. But there's a lot of talk of, these big institution players like Blackstone that are purchasing, logistics, that are purchasing warehouses or industrials. So industrials like PLD, TRNO, Cold, these REITs are going to be able to, really take off as we get through these tariff issues, these tariff tantrums, or whatever you want to call them, these trade wars. As things become more certain, I feel and think and predict that PLD is going to shine the most. They are the biggest player in the space. They are a well-managed REIT. TRNO Realty is a smaller cap type of REIT, but I think it's going to do very well. Cold is a REIT that focuses on, freezers, cold storage for produce and meats and things like that. So I'm very bullish, but they're very concentrated on the West Coast. So I think, it's a very fractured market, cold storages. So for this REIT to come out, I think it's going to be able to absorb a lot of the smaller players and then, grow eventually into the future. So I'm very bullish on all those companies. So no other changes to this portfolio. Cannabis REITs were my most highly speculative positions, and this stock was down quite a bit. It looks like it's starting to come up. I think with more deregulation coming, it's only going to be a huge tailwind for the cannabis REIT. So outside of that, the VGT, which is a Vanguard tech-focused ETF, this pretty much tracks more or less, QQQ or the NASDAQ 100 by a couple basis points, either negative or positive. VGT, I think, is going to do very well over the long term. Right now, of course, we had a huge sell-off, Liberation Day, markets going down, tariffs, trade wars, all that stuff. But, over the long term, this holds a lot of the Mag 7, so I think this is going to do just fine. And if any of those companies from the Mag 7 fall off, well, they'll get replaced with a newer company, right? I don't have to pick and choose or do anything. It's just going to do it for me. VGT has a really good track record. It has performed very, very well since its inception. So I'm, pretty much, I feel fine with it. I don't feel like it's a risky play in any way, shape, or form. And it holds like 300 companies. BDCs, no change to BDCs. I am really starting to like the idea of private credit. Private credit is a type of credit fund that these institutions have, or hedge funds might offer to their investor clients, typically used for, accredited investors, right? You have to meet a certain threshold, but the proxy to investing in a credit fund, a private credit fund, would be investing into BDCs. So I am starting to toy with this idea of maybe putting more money into BDCs. I just don't like their price points right now. I'd wait a little while longer for these prices to come down, but I might start throwing some money into these BDCs in the future. I also am toying with the idea of just going into a BDC ETF, but I'm not a fan of that because I like to pick and choose my BDCs. But who knows? I'm still like toying with the idea. I think credit or private credit funds are going to be all the rage here soon. And there is talk of a private credit ETF or a public private credit ETF, I guess, coming out, or that they're trying to push to come out in the future. That is being spearheaded by BlackRock. So I really think that there's some I guess, juice worth the squeeze here. So we'll see. So that's going to do it for the portfolio updates. Hope you guys liked the stream. Hope you guys liked the video. For those of you who are new to the channel, just know that I do streams Monday to Friday around 9 p.m. Eastern Standard Time. So if you want to get in on those streams, hit the notification bell, hit the like, subscribe, all that good stuff. I will see you guys in the next video. You guys take care.